All right, so welcome to the session live webinar class. Thanks for joining me. It is should be a good one, so I appreciate you joining me. If you have questions, by all means, to go ahead and ask those questions in the Ask a Question section. My goal for today is to just answer your questions in as much detail as possible. And as honestly as possible, and give it to you straight from all my trading experience and what I've done over the years. I won't be able to tell you how to manage a hedge fund, but I'll be able to tell you how to get things started, get the process started if you're looking at any specific stocks, what to watch for, those kinds of things. So let's take a look at some things overall in the market today, and that'll be kind of my goal. Now, if you have any very in-depth, advanced questions that I may not be able to cover throughout this session, just by all means, feel free to always reach out to me. It's not a problem by email, and I'll try to even make a quick little video clip personally for you to make sure that your question gets answered. So as we wait for a few more people to come in, and as I look here on my screen through some of the questions, let's pull up some of these things here and go through some of them. So let me switch here the screenshot. Keep in mind that all the trades, of course, are not recommendations to buy or sell any stocks or securities. It's really just for educational purposes. So as we look into these questions right here, we take a look. You'll probably see a mirror effect that's a little bit wild, but here's some of the questions. Okay, so if we look through some of these questions, how easy or difficult is it to earn $1,000 per month trading stocks as a newbie with $2,000 to invest? We'll cover this question. Can you explain what is backtesting and give some examples? This one's a little more difficult to explain in this video. It's a little more advanced, but I'll give you some starting points. Well, you look at the chart for Nike and SNE and tell me what you think. I recently purchased a few shares in both. I guess the best route would be to wait for higher green volume before getting in more. And can you talk about how to rent stocks? Is there such a thing in North America? So let's go in detail in a few of these questions, and then we'll get back into the market overall. So first off, can you talk about how to rent stocks? Is there such a thing in North America? As far as my understanding goes, I don't know of anything regarding renting stocks. I'm not sure what you mean by renting stocks. You know, when we talk about building a website for businesses, I know that with new industries, what they've done over the past is they built out websites now, and then you can rent a website and just change your phone number around, and that way the leads are going to you. As far as renting stocks, I'm not really sure if there's really a way to rent stocks or rent the profits. So my answer to that would be a simple no. I don't know about it. I've never heard about it, and I'm not sure exactly what you're referring to when you ask that kind of question. As far as looking at how easy or difficult is it to earn $1,000 per month trading stocks as a newbie with $2,000 to invest, this one's a little bit more difficult to, I hate to be the bearer of bad news, but let me just give you a little calculator here real quick. So when we look at doing some calculations, and this of course depends on your own personal strategies, your own personal risk levels. I mean, if you have a huge risk tolerance and you're willing to jump out of an airplane with an umbrella, I mean, that's pretty risky. But if you want to have a parachute, then you might want to, hold back a little bit, right? So here, when we're looking at making $1,000 per month trading stocks with $2,000 to invest, the first thing you have to actually think about and consider is what is the additional capital that you really have on the sidelines to put in when things go against you. So if you're looking to invest $2,000, you probably only want to put on the line $1,000, or even if you go the 1% route, you could even put in $100. So it's a lot less of an amount. So even with, let's just say, $2,000, and let's say you're making a 50% return on investment, yeah, in that case, you could go ahead and make $1,000. But in general, your 50% investment is quite huge. It's not something that most people are able to do. So I would say if you're just starting, then what you'll want to do is shoot for probably, let's say 1%. So let's take 1,000 times 1%. Okay, you're making $10. If you're looking at 2,000 and putting all that money in right there, then you'll go in 1%, $20. So, that's kind of what I would say is a starting point if you're new, because you're not going to start to build up a business that's making $50,000 a year your first year in business, unless you really have things skyrocketing and things really work out in your favor. I mean, it does happen, but it's not going to be your first month in business. Okay, so I see here there's a few people having trouble in sound. Usually if you use Google Chrome, should work with the sound. I know some people have trouble. There's also an app you can download, but it seems like a handful of people do hear me, and it seems okay. So even Firefox seems okay. So good. So there will be, let me write that in, there will be a replay tomorrow. So if you miss it, you'll get it tomorrow. So in either case, as far as difficulty, making $1,000 per month, new investor with $2,000, it's very difficult, I would say. It's quite difficult to do that your first month on the field. Playing professional baseball, your first month, making money, tough. You got to put in that 5-10 years of training first, then maybe it's possible. But first month, probably very difficult. So in that case, is it easy or difficult to make $1,000 per month as a newbie with $2,000 to invest? Absolutely, because you're basically putting in, at $2,000, you got to be making 50% to be able to make $1,000, and that's huge, right? So I wouldn't expect that from a new trader. Okay. Can you talk about back testing and give some examples? A little more difficult to explain. This can't hear you. We've covered. Can you explain or talk about a Robinhood trading platform? Okay. All right. Robinhood trading platform. I assume Robinhood, if this is what you mean. Are you referring to the Robinhood trading platform, not the Robinhood trading platform? I've never heard of Robinhood. I think if you're referring to Robinhood trading platform, then it's a cell phone trading platform. That's let me pull it up actually for you guys. Robinhood trading platform. So there's a trading platform out there that's the Robinhood trading platform, and it's like this: free stock trades. Stop paying $10 for every trade. Really, most brokers are $5 and some are $1 or $2 depending on how many shares you're trading. But this is kind of the trading platform that people are talking about and asking about. It's a very popular trading platform because you trade for free. In essence, you're able to trade for free, and you get real-time market data and those kinds of things. There are some issues with this platform, though. Number one, I don't like trading on a cell phone platform. There's a big issue with that for me because you want screen real estate as a trader. You want to get in things, get out of things very quickly. If I was to use this platform, I would probably use TeamViewer to connect into it and use my mouse and keyboard to manipulate the cell phone, because you have to use your cell phone to trade it, or maybe even use an application like on Google Chrome to use these applications. But there's a few issues that you need to be aware of when you're doing Robinhood, okay? And the first thing is they need to still make their money some way. Okay, so they have to make their money in some way to execute a trade, because the exchanges still charges them a clearing fee. no matter who you go to, there's clearing fees. So if you go to even some of the really popular brokers, like Tastyworks, they'll even talk about very low commission rates right here. All closing trades even are $0, but you still have clearing fees because they still have to pay it. So how is it that Robinhood actually gives you these trades for free? Well, before we get there, let me explain. The first thing is I don't have an account with Robinhood, but there's a lot of things in the industries I've heard and I've seen, and I understand how they work. So here, the first issue is you can't short any stock. Okay, so if you're looking to short stock, you can't borrow it. So if you need to hedge a position, that becomes problematic with a larger account. The second issue is you can't hedge when it comes to options. So if you're looking and you have, let's say, 1,000 shares of Tesla and you're looking to sell some call options against it in case the stock pulls back, so that way you can make some money back. Again, there's another issue right there. So you can't do that either. Now, going into Robinhood, there's an issue that goes into when they do the clearing, when they put things through on their, let's just say, I don't think they'll mention it here, but basically, think of it this way: when you have a company and a business, the only way that they can do free giveaways is if they're looking to have expectations of future sales sometime in the future or make some profits. They mention that their profits come from partly investing the remaining capital that's not on deck or that's not invested. But then also they have partnerships and deals when it comes to the platform. And those partnership and deals is where they send your orders through. So say you have company A, B, and C, and D. What they actually do is they have a partnership maybe with company C and D, but it's not always the best fill rate. So take, for example, if you're getting into a stock and the stock price is $55 plus clearing fees, Robinhood may give it to you not at $55 if that's the best rate. They may give it to you at $55.75. So you're paying an extra quarter or 75 cents per share or per trade execution to get that order through. And that's how they make their money on the back end, because they have partnership deals. They funnel it through their system, through their partnership deals. And that's really how they make money. And, I think they've been getting away from that because people in the industry saw that, and, it slowly spreads through word of mouth how they make their money, because you have to be able to make money to be able to sustain a company. There's just no way to do it. Just like for me, I need to be able to trade and make profits in order to stay in business of trading, and the same thing with selling courses. If that business is to continue to survive, I need to be able to sell products, courses, books, and that kind of thing to be able to pay the assistants. So the same thing with Robinhood. They just send it through their partnership deals, make a little bit on the cut. So you, in essence, get a little bit of a worse fill rate. It's not necessarily bad, but it's not as great, shall we say. So anyways, that's just my take on it. I wouldn't want to trade from a cell phone, but in either case, you can go ahead and do your own due diligence and research. Cash interest. So there you go. Jeff mentioned a few things regarding Robinhood, so you can go ahead and check them out. Okay, let's see here. Who is better for charting for intraday trading, TC2000 or Thinkorswim? It's a personal preference. I mean, there's a handful of different companies out there that's great for charting, great for stock trades. I like TC2000. I'm comfortable with it. This is TC2000. Thinkorswim, you can execute the orders right away in the Thinkorswim platform. There's other great trading or charting platforms. I mean, if you look at TradingView as well, sometimes they're also really good. They have a more of a real time, I find, than TC2000. But the scanning feature for it, I'm not as a fan of it, simply because I'm more used to TC2000. But it's a personal preference. Whatever works for you, then use those tools. That's really all it comes down to. It's not necessarily, I always say, what car is better? Is it a truck or a van? Well, it depends. If you need to carry 8 people on a road trip, probably a van. If you need to haul lumber, well, maybe a truck, or if you need to tow something, maybe a truck could be better. So again, it's just a personal preference, which one you think is better and works for your needs. That's really what it comes down to. Okay, can you please explain what back testing is and give some examples? The examples will be actually difficult to do at this point, but I'll explain what back testing is. Back testing is really looking at the history of things and seeing how that would apply in the future as far as your results, whether that's profit and loss or how the strategy would do. And when we look at Thinkorswim, what's interesting about this is they do have different backtesting strategies. There's other brokers that have great backtesting things. They also have an on-demand platform that you can go back in days and actually put in and execute orders. So the whole point behind backtesting is to see if your strategy works. So you could do it manually by putting the orders in and seeing it day by day, or you could do it systematically. The way you would do it systematically or automatically is you go into studies, edit studies, and then there's a strategies here. So what you can do is you can create a new strategy, and then what you'll do is you'll name the strategy right here. And what you'll do is you'll go ahead and start scripting. Now there's a lot of functions in here that you can use, and there's a lot of editors and script editors that you could do, and formatting the code. That's beyond the scope of this video. It'd be very, very technical, but you could go ahead and research this a little bit more. And there's operators that you can go ahead and input. They have already some studies right there, just right above my head. You can see there's some studies that are pre-designed, like Bollinger Bands and things like that, but you could custom code your own strategy and style, and then you input it and run it throughout your chart. And once you see that, then by all means, it'll tell you your profit and loss for that time frame. So anyways, that's how you go about doing those back testing, and that's how you create a kind of a script on the baseline. But again, it could take an hour or two to create one. Just depends how complicated you want to make it. Okay, so let's take a look at some of these charts and questions here about ticker symbols. Let's look at overall market conditions. So here, if we look at the SPY, keep in mind right now we have earnings that are coming right around the corner. Tomorrow we have JP Morgan, I think Citigroup, and then the next day we have, I believe, Bank of America and a couple other financials. So we have the earnings season kicking off. Already there's a few that are released, but earnings season really is coming right up in the forefront. And with that in mind, you need to be careful of the stocks that you own. So don't miss the earnings and be naive to think, oh, your stock is going to go up or your stock is going to go down. Make sure you understand the risks involved, because they can jump really high during earnings or sink really low. Now, if you're trading ETFs like SPY or doing options on the SPX, RUT, those kinds of things, then that's a different story. You don't have to worry much about earnings, and you don't have to worry much about fundamental analysis. But if you're doing stocks, then keep in mind the earnings season is right in front of us. So looking here at the overall SPY, today we had a little bit lighter volume day with the Fed minutes released. They didn't really say anything much. Market continues to trend real high, real toppy from that moving average. If you look at it, we're at 47.6 million shares, 43 the previous day. We'll see what happens tomorrow morning with those earnings. That's probably what's going to move these stocks one way or the other based on that sentiment. If we look at Nike here on the tickers that Jeff wanted me to take a look at, let's start out with the monthly or even quarterly. When we take a look at this company, overall it's had some real nice growth. Here we're a bit extended. If you look at the long-term picture, right? The long-term picture, we're a little extended. If we look at the monthly, we're doing okay because we're coming right into kind of an average, moving average right there. And we've been consolidating. We've been really consolidating in this range and in this base. So that gives us almost a 2-year consolidation pattern. So in that case, it looks okay. If we look here at the weekly, there's our consolidation pattern. I'm also checking the volume here. you'll notice that right here that volume was picking up lightly, but then we're decreasing a little. So right there you could see there's that decrease in volume as we skyrocketed higher, so consolidation is normal. So here, as we go back into the weekly, you can see the stock attempted to break out a little bit right here, right around, what is that, June, July time, August time, but it couldn't hold it. It couldn't get back above that $60 price level. There was some resistance right here. So you could say on a shorter term, this is our little sideways consolidation move, okay? Now you can also see how this lines up real clearly if I go ahead and draw that line from here to here. So let me pinpoint a few swing points out. You can see it touched it perfectly, kissed it right here, and came in right there as well into that. So a handful of points were hit at rejection spots, and now we're coming back to test the 50. So when I look at this stock, 50 is the line in the sand. That's the critical point. That's the critical area you want to watch. If we get a bounce at this level, should be good again for a little bit of time. I would take some profits in the 60. That would kind of be my plan. If you're trading options, I would sell some puts if you're long right there. If you want to go short, wait for the bounce and a rejection at 60, and you could potentially sell some calls on the simple side of things. Obviously, you could do butterfly strategies, calendar strategies, iron condors, so many other strategies, but again, that's more complicated. So here, what I'm seeing is there's a lot of rejection, but this market has been pushing higher and higher. If this breaks lower, you could see an accelerated sell-off. Now, if this stock breaks lower, I would also expect other stocks like Starbucks to break lower, just many other companies that'll, unwind altogether. But in either case, right now, this was really digesting. It's been almost 2 years. It'll probably continue doing it for quite some time until that 50 is broken or we get a bounce. So risk to reward, give it a couple dollars right there, 48 if you're doing a stop, and see what you get if you see the volume coming in. Right now, there's some bearish volume right there. I don't like it because we have a few spikes that are a little bit higher and then also higher. I would like to normally see this die down in bearish volume, and then you'll see the bullish volume pick up if it's a positive view of it. In this case, you're kind of holding flat and level with the volume. If I look at SNE or Sony, it's not one that I watch that often simply because we've had this explosion flare. I call these stocks the flare because what they do is they explode, they flare up, and then they die down. Anyways, when we look at this, you always start again with the monthly. You look at it, and then you get closer into it, and you start seeing, okay, well, what's it telling me? What's the volume telling me? We're dying out. What's the longer term picture telling me? It seems like a lot of times, especially over the last 17 years, this stock historically, anytime it gets a little bit of wind, it seems to sell off. It's not one that people are really buying a lot into. I'm wondering if there's a lot of overhead supply over here that people are trying to just get out. I'm not sure if that's the case because we have a lot more volume over here. Normally, if that was the case, there would be more volume earlier. But in this case, what's happening is we're still getting a lot of selling action around this range. And then if we start looking over here, let's just take a quick peek. You're seeing that at this level also, which is right around $40, we're also getting some rejection. So as we get into the weekly, I know and understand that, but if I want to trade it shorter term, well, here's my weekly. I could say, okay, well, we have kind of some support right here at this level. I have some support even around this range and this level right there at the $20 range. So could you play it on those bounces? Yeah, you could, but I also know that the bigger picture, that flare is dead. The flare has been dying out after that initial major spike. Stock was big at one point, but now, the flare is losing steam. Could you get some pops here and there like you did here in 2016 or even a breakout a little in 2017 for a $5 gain here and there? Yeah, you could. $5, $4. Yeah, you could. But, is it one that attracts me? Not really, because the volume here is light. You can see the volume also continues to decrease here as we look at it. I would much rather see like an increase in volume. So if we just started to see volume picking up, That's would be a lot nicer. So if we look at Tesla right here, and we look kind of on the, let's go kind of to a 3-day, you can see that volume started to pick up and started to hold. That's kind of what you want. Same thing here, volume picked up a little bit right there. So you'd want to see that right here, this increase. You'll still have some selling spikes, but you want a growth in volume on the upside moves. And we're not seeing that with Sony here. And in this case, you got a 1 or 2 spikes, but overall bigger picture, you know, is still to the downside. Hope that answers your question there. Okay, would it be better to start ordering ETFs before start ordering options? Would it be better to start ordering ETFs before start ordering options? I'm not sure I understand the question fully. I mean, it depends. I guess start trading ETFs before you start trading options. You can trade ETFs anytime you want. I think they're actually better to trade before you start trading stocks because you don't have to worry about earnings and the movements behind them. There's a lot less volatility, but you usually make less money because when it comes to trading, you want volatility. You want a higher VIX, not a crazy VIX like at 20, but 16, 14, you want more volatility. And that's why people like those more volatile stocks like Tesla because they move. So in this case, I'd say ETFs are a good starting point, then maybe getting into stocks, then options. That would be the better approach for educating yourself, simply because options are more complicated. Could you just jump into options? Yeah, you can, but the learning curve is probably going to be a little slower and it's more complicated of a subject matter. So there's much more education you have to do before you see some results or be able to do anything. So hope that answers the question. Okay, let's see here. How and what do you trade? Stocks or options? What indicators do you use? Okay, easy question. Typically, I prefer options at this point in my life, just because it's simple. For me, it's more advanced strategies that you can do. I will trade stocks from time to time, but usually that's more longer term investing where I'm placing my money on the stocks and letting them go. There's some advanced option strategies that you can mix stocks and options as well, like theta scalping and gamma scalping. So there's some advanced strategies, but you need a lot more capital to go ahead and do that. And also you need more of a volatile market. The thing that stinks with this current market, if we look at it, is the VIX is so low. So a lot of strategies, day trading, swing trading, it's tough to trade in these market conditions actually with a lot of the computer trading, algorithmic trading, simply because there's really no market. There's no movement. And if you look at, as well with the SPY or the SPX just recently, I mean, we're moving 4 or 5 points, you know, here and there, sometimes nothing. But overall, a 5-day period, you're moving like 7 or 10 points. And sometimes you get these breakouts where they move a little bit here and there. But the issue is you can't get in on dips like this and then expect huge pops. Talking about, let's just see, going back here. In 2010 and 2011, much easier to trade because you have all these pullbacks that happen, and there's movement in the marketplace. Nowadays, you know, it's a little more difficult to trade. But if you're looking for stocks or options, you know, it's a matter of personal preference and experience. As far as indicators that I use, I actually keep it simple just like this. I look at price action, the volume, and that's it, the behavior. The behavior is the price action. So the chart will tell you everything you need to know. There's no real indicators that I look at. I will scan and jump on an indicator from time to time, but it'll be very, let's say, it's 1% out of the 99% of the things that I look at, simply because a lot of times they confuse you, or you can get everything actually right from this chart. So if I looked at Bollinger Bands, I already know that this is stretched from the price. How do I know? Because of the moving average. I know that this is contained within the Bollinger Bands. This is a little stretched. This is a little stretched. So look, when I pull up the Bollinger Bands, you can see right there, You know, here's our stretch point right there, stretch points, right? So you could see because the moving average is already kind of right there. So you can really get that from the chart itself. You don't have to really use any indicators. Now, sometimes I have some chart setups like this, like I like a 3 time frame view. So if I look at the S&P, I might do a 30-minute, then a daily, and a monthly to really get a bigger perspective. So it shows me the short term. I might get a daily, intermediate term, and a monthly big picture view. So I'll do something like that. And if I change it, let's say to an Amazon, then boom, the same thing. If I'm looking for something like a 30-minute to just kind of get a quick glance, where's that resistance, where's that support, you know, then I'm looking also, okay, well, that line is right there. Well, does that line actually extend to other price levels? And yeah, it does. So I'll start looking at things like that, and then does that line extend there? So sometimes that's helpful. But I don't really, RSI, I don't really look at it. I have some of these things on there, but I think I look at it maybe once every 2 months or 3 months. Normally, I'll glance at a Bollinger Band here and there, but mostly price action and volume. It's pretty much all you need. It does take time to get there to really understand and hone in the charts and a lot of practice. But if you keep it simple, you learn about price action and volume, it's pretty much all you need. You don't need to complicate your life much more. Okay, who has the best market replay platform? I use Thinkorswim On Demand, but they only have 2 playback speeds. Testing this, when I was starting out, they didn't even have that at the time. I had a bunch of different brokers. So Thinkorswim, I find, did have the best one from my experience. Now, I haven't used the playback features on any brokers, so I couldn't really tell you of any of the new ones. It might be good for me, I guess, to sign up to a couple more brokers and just investigate those tools. But as far as market replay, I know Thinkorswim does a great deal for that, much better than most or any brokers out there from my past experience. As far as if they're the leader still, I don't know. That's something you'll need to do some more digging about. So I'll have to take a look at that and see, maybe when I have some spare time. What is the name of that tool that you're showing to check the stocks, S&P? This is called the TC2000. There's also a coupon. If you go to the Traders Fly website and you go to the resources, it's TC2000 by Warden, and that's usually what I use. There's a lot of tools in here also, and if you go into the Start Here section, there's some tools in there. I'm planning to upgrade a few of these things as well and adjust some things because I know Trade King got bought out, so the website's in progress. I have some people that are helping me with that to save me a little bit of time and do some of the content. But TC2000 by Warden, and if you click there, I think there's a $25 discount for you guys. So by all means, feel free to check it out. It's not free, but it's worth the service if you're big into charting. They also have freestockcharts.com, which you need Internet Explorer in order to use the service. So anyways, those are kind of the bought out Scottrade too. Yep, that just recently happened as well. Scottrade got bought out. Okay, so there we go. All right, so those are kind of the main questions. I'll go ahead and do a couple of look through some of these comments and look and review a few stock charts here. Let's just see. What is the moving average line on your volume, and could you mention how to use ATR? Okay, so the more important one here is the moving average on my volume. Okay, moving average here on my volume. Why do I have this? Okay, think about it. Why do I have the 20 moving average on my volume? Can anyone guess? I've mentioned this a handful of times in the past before in my recaps and the Let's Talk Stocks section. But I like that moving average because it gives me an average estimated price or estimated volume throughout any period. Now, the reason I use 20 is because how many trading days are there in a month? 20. So that's why we use 20 on the moving average for the volume. 20 trading days in the month. So we get to see a monthly average of that that volume. So hope that makes sense. Let's see. Do you think that the way they rolled out the i8, i10 messed up the price action in Apple? iPhone 8, iPhone 10. No, I don't think actually the iPhone rollout messed up the price action. Already the stock was priced in to be a little toppy right here. It got a little above it, but it wasn't able to hold it. So we had this pullback. Now we're getting a little retracement, but it's on lighter volume. If we reject here a handful of more times, we could see a ABCD pattern forming. So that's something to be very careful about, because right here we have 52.9 million shares and that bar, and we're trying to do 15.6 million. Can it still go higher? Yeah, it can. But you have 52 million shares sell side going into 15.6. So it's a little tougher. If you take a look at some Fibonacci sequences right here, just on a retracement level, look how perfect this lines up on a 50% level. Not that fibs are always reliable, but you can see it lines up real perfect. And we still got a little above it right there, but look how perfect that lines up. I don't know. It just looks a little too classic to me. I don't think their rollout was a problem or a mistake. I'm not a fan of Apple products. I like their stock. It trades well, a lot of liquidity, but the products just are not my taste, but they've branded it really well and people are sucked into it. So in either case, point being here is watch that 150. You could also watch that 158 level and see if that gets broken. I think the issue with Apple is just there's other companies that people are picking right now, and the price action is, well, it's got extended, pullback. We'll see what happens here. Also the other thing that happened the other day, I'm not sure if you were aware of this. It was in this, I think it was this day. Where's the crazy movement? Right here, where the robots or algorithms, and you can look it up on the news channels there, the algorithms, there was a misprint in the one of the news articles for the Apple stock, where they said that Google was buying Apple for like $9 billion. Right here, Google buying Apple. Sorry, that was just a test. So Dow Jones said this, and all the robots and algorithms kicked in and bought up the stock, assuming it would go higher. So that kind of influenced the price quite a bit. Probably some investors lost a bit of money there. Okay, let's see. Okay, how and where do you go to see if volatility is coming back? It's tough to say when volatility is coming back. Usually I look at volatility just like on the VIX to see how much potential there is and how low things are. You look at it kind of like a band. 50 is a little high and extreme relative to the overall last 20 years, so I doubt we'll hit those levels. So as you start looking at things, where's kind of your range? Your weekly range, I would say, is kind of where you're trading at right here. So let's stretch this out a little bit. So if we go kind of the 3-day, and let's see, right there, you can see that's kind of where the nice core levels are. That's kind of the average where you want to be, the highs and the lows. And right now we're at the lows, and I would rather see it somewhere in the 16, 15. That's a nice sweet spot. If it gets in the 20, it can be a little bit panicky, and you can get corrections in those situations, 20, 30s. But a nice sweet spot, 14, 15, 13, 16 is a good volatility, real nice for trading, real good if you can trade short and long. There's usually more sell-offs. So typically volatility goes up when markets sell off. So the professionals actually, they want it to sell off. But keep in mind, they also want to liquidate their positions and let the other people hold their bag, kind of let them have it. So they need to get out a lot of shares, millions of shares. If they just do a flush and a dump, then they'll lose money. So that's what they do, is they unroll positions, and then eventually they just dump it. And that's where the crashes come in. That's where the pullbacks come in, is when they start dumping big shares. I mean, you look at P&G, what happened. all of a sudden you had some people dumping and dumping, or like on this day, when they just flush it all in one day, you can get a massive sell-off. Now, some people will buy it back and buy into that, but when you have a major flush, especially to the whole market, it's real nice trading for people that can go long and short, simply because now you have more volatility that creates higher option prices. It allows you to trade options more frequently and allows you to sell more premium. You can buy on dips and then you get nice pops. Just think about it when you had the Brexit time frame. Where was it? It was somewhere earlier over here. Was it last year? Somewhere right around this time frame when you had this Brexit and then you had a pop. Those are nice points. Pullbacks, pops, anytime you get a pullback, you get a nice extension. Nowadays with this market, the risks are, it's tough because you haven't had pullbacks. So anyways, do you know when it's coming back? It's hard to say. With more robotic trading, it's slowly dying out, I guess you could say. Anyway, I guess we'll just hope for it for now. Let's take a look at AMAT. If I purchase it at 49, what is my risk to reward ratio? Okay, so AMAT. So applied materials, if we look at the monthly chart, this stock's, extended. So take a look. Here's kind of our issue right here. So that's already where we're at. And again, I look at it as a bar, not just a price level. So this whole range is kind of your risk. I would say this stock is extended, and it's extended on lighter volume. So that's the big picture right away. That's what I see. Now, can it go higher? Yes, it can, especially in the current market. If we look at overall the weekly now, well, this paints a little bit of a different picture. We have an A to B, B to C, C to D kind of pattern right there. If you look at it in that way, but still, it's extended. And I have to still think and remember the other bigger picture I just saw. We're coming into all-time high prices, right? Just the same stock we just talked about, P&G. Look at this one, 2015, all-time high prices, little pullback. Doesn't matter about this Nelson Peltz or proxy vote. Prices are price. The key here in stocks is price. So when we look at AMAT right here, I'm coming into that $53, $54, $55 level. I know right there on the monthly, that's coming in to all-time highs. So 54, 55 is almost my max. So if I look at the weekly, yeah, it's breaking, a little consolidation pattern. And if we look at the daily, it continues to do well. And the stock has this trend line that's looking fairly nice, and it's a good, healthy level. And then if we look at it, well, if you're doing short-term trading, well, 48 could be 47, 48 could be your risk. So that's, what is that, about 6 points, 5-6 points. If you really want to be tight on it, well, you could do something even closer, 51, 50, in that level, nice round number under there, 49. But you're looking at a $4, $6 risk, $3, $4, $6 risk for a potential gain of, well, when I look at the monthly here or quarterly, for a potential gain of 55, so $2 gain, risking $6 to make $2. It's not my thing. So I wouldn't go for it. And, risk to reward just doesn't seem to work out or pan for me or my taste. All right. So any further questions, or is there any other questions that I can help you with? We're already coming into 44 minutes. So if you have any other questions, by all means, go ahead and post them in there and I'll answer them. But if not, then we'll go ahead and wrap it up. So let's take a quick look. Overall, last couple of key points. Keep in mind, we're looking at the overall market right here. We have earnings coming into play. So be careful here on the S&P over the next couple days. See what happens. You have Friday coming up as well. Weekend, sometimes people like to sell off a little bit. But what people are going to watch is those earnings. So that's going to be the key here over this next couple of days. And then the next week, it's all going to be earnings talk, earnings. And that's really what's going to dictate and move the markets. So we'll see how things perform. If you're in a stock and it has earnings coming up, it's best to sell half, a quarter, a third, even get out of the position if you're worried about it, because you don't want to be left holding those earnings or holding those stocks through earnings, especially if you get, massive movement against you. And that's really where a lot of problems lie for people within their accounts. And that's where the big trouble is, because if you get a massive movement against you, you can lose a great deal of money and capital, and it's a lot of work to get that cash back. Anyways, thanks for joining me. Let's see. Whoa, a lot of questions came up. Let's do a couple of quick, final quick questions. Google. Let's rifle them off and call it a night. All right. Well, Google. There we go. Alphabet. So here, this one coming into resistance right there. Little bit of trouble. If it can break through past that level, call it 1,015. Give it a little wriggle room. Might see higher prices. Key support right around 920. Okay. So that one's done. What will happen? What will happen if with the market if there's a war with North Korea? Who knows? Typically, war is, as weird as it says, unless we're totally dead, people buy out, buy more stocks after the initial sell-off. So there might be an initial panic reaction, but then people buy stocks, and that is because, well, they're still alive. If they're not alive, well, then they can't buy stocks. So if you survive, great, it's going to go up, and then you'll live through it. So that's usually the way things work out. If you're not, well, at that point, it doesn't even matter. That's the typical old school mindset that a lot of old school traders say, that, hey, if you're alive, then you'll be able to buy stocks. If you're not, well, at that point, it doesn't matter anyway what your position is. Normally, though, you will get some panic selling with the initial effect. So will that escalate into more of other issues? That's the bigger question that you need to think about. As far as the individual topic, to pinpoint the sell-off to it, usually it's not one thing that moves the market. So the individual news item isn't going to move the market. It's going to create an initial movement, but then other things will escalate. So that's usually what happens. What stations or websites do you use for market news and social media? I don't do the news. I don't do social media. I will outpost some things on Twitter. So I'll post some things on Twitter, and that is me feeding things out for you guys. Otherwise, I don't really comment or interact much on social media. I just don't have the time for it, number one. I'd rather answer your comments on YouTube or other platforms or social media, but I don't usually interact with people and socialize and that kind of thing. I just don't have the time for it. Which stocks could go up and which could go down? Oh, big question. There's a lot of those. Check the critical charts. I mentioned a handful of that in the services, so I'd say check the critical charts for that. Quick analysis of Ulta. Let's do these last two and call it a day. Okay. ULTA. All right. This one, beauty, right? The beauty supply. So here's our initial movement, A to B, B to C, kind of C to D. You could say that also this is A to B, B to C, C to D. And then internally here, if we go orange, you could say A to B, B to C, C to D. So a couple of little patterns there on the big picture. If we look overall, what's happening, watching the volume here as well, right? So I'm checking out what's going on here with the volume and the resistance levels and support levels. So you can see right here, the stock couldn't get back above it. So it had an initial sell-off right here, tried to get above it, couldn't do it. Further selling is coming into place. And the volume to the sell side's increasing. So here's our support. If it breaks this, I would expect further lower prices. You can see this big wide price spread bar. So that's also the issue here. So further selling, if it breaks 200, that could create another problem right there. So you could see that's kind of the issue right there in that area. I would expect further selling in the longer term. In the shorter term, we are slightly extended here. You can see here with the moving average, right? You get a little extended. So a little bounce here and maybe a little more selling could take place. That's just my thought. And that's also because volume is picking up right here on the sell side. But little bounces do happen. And then a further selling is my guess. Okay, that's just the way I look at it. 187 might be a nice spot because now you're getting into right around that level of the moving average. Hope that makes sense. All right, so let's see. This is awesome. Will you do another Q&A again? Yeah, I try to do a Q&A once a month. So that's kind of my goal. Once a month, I do a Q&A as a freebie. Otherwise, you know, I do things with the critical charts, a lot of things with the video members and things like that. So as I get a few more people that help me out here on the websites and take care of some of the other little administrative tasks, I'll look to do even more things and contribute back even more. So we'll also be doing, as a little hint, free coaching sessions live and broadcasted. So I already have one filmed. All of it was actually, let's just say they opened up and they said I could use it. So we'll be doing contests, not contests, but, you know, drawings for maybe a monthly coaching session absolutely free, and do one-on-one sessions and post those as well. So in either case, thanks for joining me. Enjoy the rest of your week and your weekend. Make it a great one. And if you have any more specific questions, please feel free to reach out and get back to me, and I'll try my best to reach out to you. If you had trouble with the sound, send me a note and I'll see what we can do. All right. Thanks again. See you next time.